Hey everybody, welcome to Mortgage Today for Wednesday, January 3rd, 2024. And oh, what a day it was. UMBS 6.0 coupon was down another 20 basis points this morning, bright and early at 5.5, was down 25 after about the first hour of trading. The U.S. Treasury market extended losses for the fourth day, putting the 10-year yield near 4%, reflecting investor caution ahead of the release of fresh economic data in the Federal Reserve's meeting notes. Traders awaited the U.S. manufacturing job openings data and minutes from the Fed policy due later on Wednesday in the morning trading. Swaps pricing points to about 145 basis points of cuts through December. Recent remarks by FOMC officials suggest they're worried about the unemployment rate on the verge of a persistent increase. From Elliot Eisenberg today, we also got 2024 is likely won't be a year of great economic growth because fiscal policy will be increasingly contractionary, savings rates will necessarily stop falling, and bank lending and thus the money supply will continue contracting. Additionally, the interest rate insensitivity exhibited so far by households and businesses in the face of high interest rates works in both directions. Therefore, the expected rate cuts may not be as stimulative as hoped. Bonds were moderately weaker in the overnight session, with the 10s hitting 4% for the first time since Fed Day 3 weeks ago. The 10 a.m. data was hotly anticipated, and the volume response confirms it. JOLTS, so job openings and labor turnover, came in at 8.79 million on an 8.85 million forecast. It was 8.852 previously. ISM manufacturing came in contractionary at 47.4 on a 47.1 forecast. It was 46.7 previously. The U.S. manufacturing sector continued to contract, but at a slightly slower rate in December as compared to November. Companies are still managing outputs appropriately as order softness continues. Then we got remarks from Richmond Fed President Thomas Barkin said that he sees the U.S. economy on a glide path to a soft landing. This is making markets feel the Fed thinks that they can land where they need to be without doing cuts. The first 2 days of the new year were shaping up to paint an unpleasant picture for the bond market, in which the strong rally in November-December faced the prospect of technical correction. The risk remained through the first few hours of the morning, but things began to change after the JOLTS data, not at first but eventually. As losses turned into gains in the afternoon, we had fresh proof of concept for the prevailing data-dependent narrative for rates. JOLTS wasn't even bad per se. It was merely the first time we've seen consecutive months under 9 million since job openings were still on the way up in 2021. At the risk of reiterating the obvious, Friday's jobs report will tell us even more about the data dependency. On a side note, Fed minutes helped primarily due to the nod to the eventual winding down of quantitative tightening, something that came through better in today's minutes than the press conference 3 weeks ago. The UMBS ended the day up 8 basis points on the 6.0. The 5.5 gained 6. The UMBS 6.0 ended at 101.38, so 101.38 puts us right on that Fibonacci line. So that Fibonacci, around the 23.6% Fibonacci line, is right at 101.392, which was holding as a floor for quite a while before breaking through yesterday. In other news, during 2023, the shortage of single-family homes in this country, combined with a population of American homeowners that lack any incentive to refinance or move, resulted in the lowest annual gross issuance of agency MBS since 2014. For 2023 as a whole, we didn't even hit $1 trillion in gross issuance, ending the year just shy of $997 billion. This total is down 41% versus 2022 and less than half of the $2.2 trillion average seen annually over the past 5 years. But in terms of things you can control, it's your mind and your skills. So check out the 2 posts today from our sponsor at wellthatmakesense.com. Very first one is part 6 of our book From Influence by Robert Cialdini. It is the book on influence. So it's, if you have a life that requires you to influence people, whether it's sales, kids, spouses, family members, just influencing people. You want to learn about it. And Influenced by Robert Cialdini is the preeminent work on the topic. And this is part 6 in our video series about authority and how to mimic authority and how to use authority. We also got a third episode of our Yeah But series. This is a brand new one where me and Michael J. Barnes, we discuss both sides of topics within housing and mortgage. And today's topic we discuss, do we actually need a housing crash? So come check it out.